Welcome to TalkTickers. Today we're diving straight into the recent earnings call for GTPL Hathway.
Yeah, we're going to break down the numbers, what management said, the outlook, all of it.
Exactly. Think of this as your shortcut to understanding what happened, what it means, and, well, what might be next for them in cable and broadband.
You've gone through the details, the commentary to pull out the key stuff for you.
All right, let's start with the snapshot. How did they do this past quarter, ending March 31st, 2025?
Okay, so overall revenue saw a pretty healthy year-over-year growth, 10%, reaching INR 889 million.
10%, okay. And subscriptions?
Subscription revenue specifically came in at INR 982 million.
Mm-hmm.
And broadband revenue also saw an increase, about 4% year over year, totaling INR 358 million.
And profitability, what did the EBITDA look like?
Right. So the consolidated reported EBITDA was INR 1,114 million. That's a margin of 12.7%.
Right.
But their operating EBITDA, which, often gives a clearer view of the core business.
Yeah, the underlying performance.
Exactly. That was INR 121 million, hitting a margin of 22%. Quite strong.
22% operating margin. Got it. And the final net profit?
Net profit attributable to the parents for the quarter landed at INR 105 million.
Okay, so decent quarter on the face of it. How did the full financial year shape up?
The full year also showed pretty consistent progress. Total revenue grew by 8% overall, reaching INR 72 million.
Right.
Full year consolidated reported EBITDA was INR 625 million. That's a 13.2% margin.
Mm-hmm.
And again, that operating EBITDA for the full year hit INR 463 million, maintaining that same 22% margin we saw in the quarter.
So consistency there on the operating margin.
Yes. And the net profit for the whole year attributable to the parent came in at INR 479 million.
And anything for the shareholders directly? Dividends?
Yes, actually, the board recommended a dividend of 20%. That works out to 2 per share.
2 per share. Okay. So it looks like a solid year overall then.
Yeah, steady growth, decent margins on the operating side.
Right. Now let's zoom in a bit. Starting with the traditional cable TV segment. What's the story there?
Okay, cable TV. Their digital subscriber base hit 9.60 million as of the end of March.
9.6 million.
Yeah, and of those, 8.90 million were paying subscribers.
Okay.
They did add subscribers over the year, about 100,000 new ones, both active and paying.
Just 100,000. That sounds lower than perhaps previous years.
It is, and management acknowledged that. They mentioned a higher churn rate, subscribers leaving during parts of the year.
Okay. Any reasons given?
They pointed to new content providers coming in and also just the general pull of social media impacting additions. It's a shift from, say, adding maybe 500,000 annually in the past. So 100K is, a noticeable slowdown.
Definitely something to watch. How are they planning to tackle that churn?
Well, the good news, apparently, is that they saw this churn sort of neutralize in the fourth quarter.
Oh, okay.
So they sound optimistic about getting back to higher subscriber addition rates going forward.
And what about pricing? We hear broadcasters are increasing costs.
Yes, that came up. Broadcasters have hiked prices. GTPL Hathway's strategy, they said, is to try and absorb most of that cost themselves.
Really? Why?
Market sensitivity. They feel they can only pass on a very minimal amount to customers without causing issues.
That's a tight spot.
Yeah.
Has it impacted subscriber ads?
Apparently not negatively, especially, they noted, with the IPL starting. That always gives a bit of a boost.
Right, the cricket effect. Okay, let's switch gears then. Broadband. That's usually the growth engine, isn't it?
It often is, yeah. So for GTPL Hathway, their active broadband subscriber base reached 1.045 million.
Over 1 million now.
Just over. They added 25,000 new subscribers in the quarter. That's about a 2% increase year over year.
Okay, 2% growth. And their network reach, the home pass.
Their home pass stands at 5.95 million homes, and significantly about 75% of that is now FTTX ready.
FTTX being fiber closer to the home.
Exactly. Fiber to the X, better speeds, more reliable. Their FTTX-specific home pass grew 2.5% over the year, adding 150,000 potential connections.
And what are people paying, and how much are they using? ARPU and data consumption.
Broadband ARPU for the quarter was INR 465, just a small increase from last year.
Okay, 465.
But data consumption, that's jumped. Average per user per month is now 396 gigabit.
Wow, nearly 400 gigs.
Yeah, that's up 11% year over year.
Shows you the demand for data, doesn't it?
It certainly does. But you mentioned headwinds earlier for broadband. management flagged some challenges.
They pointed to increased competition from the big telcos.
The mobile operators.
Yeah, especially with all the noise around 5G. They mentioned a sort of euphoria in the market about 5G possibly slowing down their fixed line broadband growth.
Interesting point. So the perception of mobile speed is hurting fixed line.
It seems that way, according to them.
Yeah.
But they're hopeful. They think that as mobile data prices potentially start to creep up, their fixed broadband value might look, well, more attractive again. A potential silver lining for them, maybe.
Yeah.
What about this new license they mentioned? That sounded potentially significant.
Yes, they received a, quote, much anticipated 10-year license to operate and maintain services.
Maintain what kind of services? Did they elaborate?
Not really on the specifics of the mechanism itself. It's described as a new broadcasting mechanism. They expect it to bring significant efficiencies in cost and reach.
Intriguing but vague.
Yeah, they said more details would follow once it's operationalized, so we'll have to wait and see exactly what that entails.
Okay, so looking at then, what's the overall game plan? The growth strategy?
Well, they're actively evaluating growth options, both organic, just expanding what they do now, and inorganic, which usually means acquisitions or maybe partnerships.
Right.
A key plank is continuing expansion into other Indian states, basically increasing their total addressable market.
Makes sense.
But the core focus, they stressed, remains on efficiency, on customer acquisition and retention, keeping customers happy with value adds, leveraging tech, and, careful financial management.
And specifically for next year? FY26. Any targets mentioned for subscriber growth?
They're definitely looking to improve subscriber additions, in both cable and broadband next fiscal year.
And financially? Any growth targets?
They expressed an aim to return to a revenue growth rate around 18% and an EBITDA growth rate of about 9% in FY26.
18% revenue, 9% EBITDA.
Ambitious.
Is that achievable?
Well, they framed it as being similar to their average growth over the past 8 years, so getting back to historical levels, essentially.
I see. Any specific models or initiatives they mentioned for driving that growth?
They talked about their Gujarat model for broadband expansion, high service level agreements, focusing on quality and covered villages. They see that as a potential blueprint for other states.
Right, replicating success.
And they also mentioned involvement in government projects like BharatNet. They're expecting an award for a project in Haryana soon, working in partnership with LC Infra.
Okay, so multiple avenues for potential growth there. Let's dig a bit more into the financials. We covered the top line and EBITDA, but you mentioned profit before tax dipped year over year. Why was that?
Yeah, the PBT dip. They attributed it mainly to a few things. One, that lower subscription income, we discussed competitive pricing, fewer ads overall during parts of the year.
Okay.
2, increased depreciation and finance costs. And 3, just higher infrastructure and operating expenses generally.
Got it. So cost pressures and slower additions hitting the bottom line, even if operating margins held up.
Pretty much, yeah. But again, that operating EBITDA margin staying in the 22-23% range is, well, quite resilient.
Definitely. And where's the money being spent? CapEx?
Capital expenditure was significant, INR 355 crore this financial year.
Okay. How is that split?
The majority, INR 230 crore went into the cable side and INR 125 crore into broadband.
And within that, what's the focus?
A big focus is expanding their optical fiber network. They've laid over 100,000 kilometers of fiber now.
Wow, that's a lot of fiber.
It is. And for broadband specifically, about half their capex, so around INR 60-odd crore, went directly into optical fiber cable, OFC.
So heavy investment in the core infrastructure.
Absolutely. They mentioned total investment in cable and broadband infrastructure over the last few years is somewhere in the range of INR 2,500 to 2,700 crore. Big numbers.
Huge investment.
Yeah.
Anything else from the financials? Credit loss.
Yeah, they noted an increase in expected credit loss, but clarified it was mainly due to trade payables related to the broadcasters.
Okay, related to those price hikes, probably.
Could be related, yeah, on operational detail.
All right, that gives us a really solid picture of GTPL Hathway's performance and their plans. Now, let's move to our segment where we brainstorm some potential trade ideas. Completely speculative, of course.
Absolutely, not financial advice, just some thinking out loud based on the call.
So given everything we've heard, the competition, the subscriber trends, the investments, what's an outrageous but plausible trade idea that springs to mind?
Okay, here's one angle. GTPL mentioned the intense competition from telcos, right? And the 5G buzz impacting their fixed broadband. They also had that slower cable subscriber growth.
Right.
So instead of bidding directly on GTPL or against the telcos, how about this? Consider a long position in a more specialized player. Maybe a company focused purely on fiber broadband expansion, particularly in those Tier 2 and Tier 3 cities.
So betting on a competitor.
Sort of, betting that the long-term trend still heavily favors dedicated fiber infrastructure, maybe even more so than GTPL's current commentary suggests they are capitalizing on, despite the short-term 5G excitement. It's a bet that pure-play fiber specialists might outpace GTPL in capturing that specific high-growth segment.
Interesting. So leveraging GTPL's commentary about competition to find a potentially faster horse in a specific part of the race.
Exactly. Betting on focused execution and fiber rollout in underserved areas.
Okay, that's one thought. How about an alternative? Maybe playing the other side.
Well, thinking about the telcos, GTPL management themselves flagged potentially rising mobile data costs. And we know the massive capital expenditure involved in rolling out 5G nationwide.
It's huge costs, yeah.
So an alternative idea, maybe more contrarian, consider a short position in one of the major telecom operators that's heavily invested in 5G.
Shorting big telco. Why?
The thesis would be that the higher mobile data costs GTPL hopes for might not be enough to offset the enormous 5G capex burden quickly, and that fixed broadband, like GTPL's or others, will remain a very compelling value proposition for homes needing consistent, high bandwidth, potentially capping the telco's upside from mobile data alone.
So betting that the 5G investment payoff takes longer than expected and fixed broadband retains its value edge.
Precisely. It's a bet against the immediate profitability of the massive 5G spend, fueled partly by GTPL's own observations about market dynamics.
Two very different angles there, both stemming from the discussion today. Food for thought, definitely.
It's ideas to mull over.
All right, that brings us to the end of our deep dive into GTPL Hathway's latest earnings call. We've covered key financials, management's take on the market, the strategic outlook.
Hopefully this breakdown gives you a clearer picture of their performance and, well, their potential path forward.
Absolutely. And just to reiterate, this was our summary based on the earnings call information. Always do your own thorough research before making any investment decisions.
Definitely.
We'd love to hear your thoughts too. What stood out to you from the call? Join the conversation online.
Yeah, let us know.